Welcome to the Financial Modeling Podcast.
I would say it's pretty vital from a banking point of view that the financial model is robust and plays an important role.
Where we discuss the latest trends in financial modeling.
The financial model is essentially the nexus of renewable energy projects.
From AI and machine learning to automation and model auditing.
What this is all about is really opening up a conversation around innovation in financial modeling.
This is your number one source for financial modeling news, tips, and tricks with your host, Matthew Bernath.
Hi, everyone, and welcome to the Financial Modeling Podcast. I'm your host, Matthew Bernath. And today we're going to be discussing something really interesting. As everybody that listens to the podcast and follows me, whether it's on Twitter or LinkedIn, knows, I love data science. I work in data analytics at the moment. And I absolutely just think, data science and the use of data science and artificial intelligence combined with data and combined with the financial institutions, there's really endless possibilities. And I often get asked the question, well, okay, you speak a lot about data science, you speak a lot about finance and financial modeling, but give us some real life examples. Give us some real life examples of how those two fields come together. Well, today we're going to be talking about a very real life example. With me on the phone, I've got Guy Zipori. Guy is the co-founder and CEO of Skyline AI. And Skyline AI, I mean, if you just go to the website, it just sounds like one of the coolest companies in the world. Basically, they combine artificial intelligence with financial modeling, and they are a commercial real estate artificial intelligence investment manager. So they're using data and they're using artificial intelligence to identify market opportunities in the commercial real estate industry. So, Guy, thanks very much for joining us today.
Thank you very much for having me.
Guy, talk to us a bit about Skyline. I hope I did it justice in my brief description of it there, but talk to us a bit about Skyline AI and really what you're trying to achieve in the niche that you saw in the commercial real estate industry.
Yeah, so first, thanks for having me today. I'm very excited to be part of this, and thanks for the kind words. I think you described it very nice. Skyline AI is an artificial intelligence investment manager for commercial real estate. We collect tons amount of data. We have more than 200 different data sources today, different kind of data sources, structured and unstructured, public and private. We buy a lot of data. We have proprietary data that we get through exclusive partnerships. Eventually, we're trying to put our hands on any piece of information that may affect real estate value. We started with multifamily asset class. We monitor around 300,000 different properties. And for every asset, we have more than 10,000 different data points going back in time up to 50 years. So we create what is probably the largest data set that exists today in real estate. And then we have our AI teams that are responsible for extracting insights and generating predictions based on this data. So we have multiple predictive models. We're trying to predict rent and occupancy levels. We're trying to predict asset values. We're trying to predict when an asset will go in the market. And we use that to support the decision-making or the entire life cycle of real estate investing, from defining strategies and backtesting those strategies to use anomaly detection and other techniques to identify investment opportunities in the market. And they can be either on-market or off-market opportunities, and then vet those opportunities and analyze them to make better real estate investment decisions.
So you spoke a little bit about the back testing there, and presumably you had to do quite a lot of testing of your algorithms, because given that this is a new field, it's not something anybody had done before. Presumably you had to do quite a lot of testing of your algorithms to make sure that what your algorithms were telling you, whether it was to buy an asset or sell an asset or whatever the case might be, you had to make sure that that was actually correct and did produce a good financial result.
Yeah, that's right. And this is one of the challenges. And of course, different models require different backtesting scenarios and have different goals or need to have different level of accuracy. So, for example, if you buy an asset based on a predictive model that's saying how much the asset's worth, then you need to get a certain accuracy level in order to buy right or sell right. If you're looking at another predictive model like the soon to sell, one of the models that we are using extensively, trying to find an asset that are currently off market, but we think that will go on market in, let's say, in the next 3 months. Okay, so in that case, if you get to an accuracy level of 50%, for example, it's still a big success because then that means that if you look at two assets that you find interesting, one of them will go on market in the next 3 months. While if you were just looking randomly at assets, then the number is probably somewhere between 1 to 20 or 1 to 30. And there are a lot of challenges around backtesting, but it's very important to describe or to define your KPIs and how you measure the success of the model.
And presumably, with the backtesting and with the algorithms that you've been able to create, you were lucky to an extent that data existed and presumably existed in some sort of electronic format that you were able to use.
Yeah, so that's right. But it's also interesting because in some cases, the fact that, in places where there's not enough data, and you can build interesting models based on data that maybe it's available, but people usually don't use this data in their models. So this is an example of places where it becomes very interesting. So for example, if you look at an asset, and let's say the asset is on market and you have all the data from the owner and from the broker, all the financials and all that, then people can take this data, and this is what people do today, and use the data to come up with the value, for example. But when you look like us, in our case, we look at 300,000 different properties, so for some, we do have financial data. For others, we might not have. So now, how you predict the asset value if you don't have the financial? So then you start looking at alternative data sources and other correlations and comparing these assets to other assets where you do have the data. And this is where it becomes even more interesting. So it's true that the existence of data is very important, and it's a key factor. And this is one of the reasons why we started with assets within the US, because there's much more data here than anywhere else. But it's also very interesting to find data that other people don't look at, or taking benefit of the fact that some of the data does not exist. And maybe one more comment on that is that saying that data exists, it's also tricky because, for example, we take financial data from loan documents. So sometimes it can be handwritten PDF files. So you can say, yes, this data is public, but taking this unstructured data and using OCR and NLP to extract the data and make it structured, that's a big challenge.
Absolutely. And I think, what you've been speaking about there is actually a lesson for a lot of data scientists out there. I see so many data scientists getting discouraged and not pursuing projects because the data is not available, or it's not clean, or it's not structured perhaps. And really, it's very rare that the data is going to be handed to you nice, clean, easy to use, accessible, relevant, timely, in a nice bow. It's just not the case. And I think part of your job as a data scientist or somebody that's working with data is to go and find these other data sources. Maybe it's unstructured data. Maybe it's data that other people have discarded that they aren't using, and really make that data work for you.
Yeah, I totally agree. A big portion of almost every data scientist is cleaning, is understanding the data, is making sense out of the data. Data is usually not in the format we wish the data to be. And there's a lot of work in cleaning the data, and it's very important as part of the process.
100%.
Yeah.
I think anybody that knows me knows that one of my favorite quotes is, I often say, a data scientist's role is mostly a data janitor and just cleaning data.
Yeah, that's right. Even in companies where they collect their own data, and they collect massive amount of data. So when you use your own data that you collect, you can assume that you can collect it in a way that it will be easy to digest and analyze. But even if in those cases, this is not always the case. But yeah, maybe that's going too deep.
Listen, you're 100% correct. And I mean, I experienced that firsthand. Even in a company where, the data is being collected, sometimes there might be a missing field, which would be crucial for your analysis. Sometimes it's not clean. So there's lots of challenges there. And I think that's just something that as a data scientist, you have to face. Guy, talk to us a bit about the industry. So obviously, you've got the technology, you've got algorithms, you've obviously got very smart data scientists working for you. Why did you choose the real estate industry as opposed to the myriad of other industries that you could have potentially gone into?
Yeah, so this is a question I'm asking myself over the last 2 years now. I think real estate industry is a good example of, first, is one of the largest industries. And it's also an industry that was very slow to embrace new technology and have a lot of data that can be impactful on the business. So I think it has a very good combination of those, like the huge industry and the data availability and the impact that you can do with the data on the business. And real estate is also an area where everyone, we all feel like real estate people in some way, right? If you rent an apartment, if you buy a home, if you invest in real estate, everyone touches this industry and space in some way. So of course, what we're doing today with commercial real estate and large assets with worth hundreds or dozens of millions of dollars, it's very different than buying an apartment. But all of us, we have something. Every person has something with real estate. So we saw the opportunity. We love real estate, and actually now 2 years in, I love real estate much more than I loved real estate before.
And that often does come with the understanding of an asset class. Once you really start understanding it and working with it, your passion for that asset class starts to grow.
Yeah, I totally agree.
Guy, let's chat a bit about the future, right? So I think that there's a lot of people that are listening to this podcast that might be a bit nervous, that might start thinking, but hang on a second, if this company is using AI and computers to manage commercial real estate, what does that mean for the future of asset management? What does it mean for the people, the asset managers that are involved? Do you think that there's still a future for them, or do you think the future asset managers will actually have to be data scientists?
Yeah, so I think that if we would hear speaking a few years ago about autonomous cars, most of the people would say that this can never happen, and that people will always drive better than machines. But I think that today, we all know that this will not be the case. And at some point, and I'm not sure if it will take 3 years, 5 years, or 10, autonomous vehicles will drive better than every, maybe not more than Schumacher, but every standard driver. And I think in this case, so we don't have any inspirations, or we are not here to replace the experts. We are here to empower them and give them the ability to see things differently. One of the ways we usually describe that is that we're trying to develop the F-16 helmet and put it on the head of the best real estate pilot. But what I do know almost for sure is that the future of real estate investing, and again, I don't know if it will take 3 years, 5 years, or 10, will look completely different and will be extensively infused with advanced technology, AI. I think this will happen. We see that happen. We are proud to be pioneer in this space, but I see a lot of large private equities infusing a lot of money into this. So I'm pretty sure this will happen, and the future of real estate investment will look different, and computers will be much more involved than they are today.
What you're talking about now actually reminds me of something that happened yesterday. Yesterday, I was at a data science workshop, and one of the quotes was that artificial intelligence will not replace managers in businesses. However, managers that use artificial intelligence will replace those who don't. And
yeah, I like this quote.
Yeah, and I think that it speaks to what you're speaking about now. So perhaps there's still obviously a future for these asset managers, but those that embrace AI and those that use it will certainly outperform those who don't.
Yeah, I really like this quote, and I totally agree. And I think also in terms of timing, that makes sense, because the people who are now moving from less senior to more senior positions in the large investors, large institutions, they're in a generation who raised with technology. It's not that we're trying to convince people who didn't have any touch with technology to understand the power of technology. These are people that grow with technology from young age, so they saw that in every aspect of their lives. And now when they become more senior in their organizations, they have the opportunity to adopt the technology. And I think this is one of the reasons why we see that happening more today. And that we'll see, as you said, people that are using and utilizing technology performing better than the ones that doesn't embrace the technology. Yeah.
Absolutely. And I think it's a case of, you're quite right. The people that are moving into these management positions today are saying, but if I can use this technology to make me a better manager, why would I not use it? It's a bit of a no-brainer.
Yeah, I agree.
So Guy, you've obviously, as you said, you built this product, and it's obviously operational in the United States. One of the reasons you say you did that is because of the amount of data available in the United States, and it's obviously one of the largest real estate markets in the world. Are your algorithms transportable then to different countries? Obviously, they would have to relearn based on the new data available in those countries.
Yeah, so I think that in general they are. I mean, we can do the same in other countries. First will be the question about the data availability. So what data is available, and in what level of accuracy in every market that we would like to enter. And of course, the models will be adjusted, and some models will be different, and some of the challenges will be different, even on the business side. Okay, maybe the challenges we have today in the US are different than challenges in in Greece or in the UK. Depending on where the economy is and so on. So there will be adjustments, but it's definitely feasible. And so now we're focused on the US, but a few years forward, we'll look into other geolocations as well.
Guy, my next question is this. Obviously, this is the Financial Modeling Podcast, and we focus on financial modeling as well as data science. Presumably your models, there's certainly a financial component to it, because your data science can be telling you that this is a good asset to buy, but the financial component will obviously have to show what would the financial return be and the profit, and it might not necessarily be worthwhile. So would you say that the financial modeling component is still very important, or does the data science component take care of that as well?
I would say it is still important. One of the things that we're doing is if you have machine learning models and you compare them to traditional financial models, you can find interesting opportunities or interesting arbitrage opportunities. So maybe, for example, the valuation model, where we try to predict how much the asset worth today, we don't use any traditional model like DCF or anything else. But we do know that everyone else in the market are looking at the asset with this kind of lenses, okay? So how can you take this for your advantage? So maybe that's one example or thought. Another one is that one of the things we're doing is that we generate a business model for every asset. And the business model is more like the traditional business model, but the assumptions are predicted. Okay, so we actually take multiple predictive models and we use the result of every predictive model as an assumption in a traditional business model. So then you can get the, for example, the expected IRR or expected cash on cash of a certain asset for a 5 years business plan, for example. But you got to that point using both traditional financial model and the more of the data science predictive model.
So I guess, to summarize, there still is a niche for somebody who understands the financial modeling, can build the financial model, but somebody who also understands the data and the data science aspect to it. And the person who's really able to combine both of those elements is somebody who sits in quite a powerful seat.
Yeah, I agree. And our team as well, by the way, we have 3 different disciplines in our own company. So we have the data science and AI people. We have the engineering team that are responsible for getting the data, acquiring the data, cleaning and merging all the data and all that, which is a very big challenge as well. But then we have our real estate team. These are people who did traditional real estate investment for years. We have a team that invested more than $25 billion over the course of the last 5 years or so, or a little bit more. So combining them together is very important for the success of the models.
Absolutely. And I think you're 100% correct. And there's no better way to end the podcast than that, I think, by saying there's still a future, obviously, for financial modeling. And really, if you understand the finance aspect, you understand the business aspect, which is that domain expertise area, and you understand the data science aspect, then you've really got the power to make some decisions that are powered by the data, supported by the data, but also supported by the financial model, and that are going to make business sense.
Yeah, I totally agree with you.
Guy, thank you so much for joining us today. Absolutely fascinating to hear about the role that artificial intelligence and data science is playing in the real estate investment industry. And we'll surely be keeping a close eye on Skyline AI and hoping that you soon expand to more countries around the world.
Thank you very much for having me again. And thanks for all the audience who joined to listen.
Thank you.
On Thursday, the 5th of March, 2020, the world's leading financial modeling professionals will attend the Financial Modeling Summit. With new developments from automation and AI to financial modeling certifications, the financial modeling profession is at the forefront of financing some of the largest deals globally. Stay tuned to financialmodelingsummit.com for registration to hear the latest financial modeling trends and what the future of financial modeling holds.